So we're back at the second annual Crowd Invest Summit of 2017. Here we have with us James Altucher. He is an entrepreneur, investor, writer, podcast show, and comedian. He just had a panel speaking about cryptocurrencies. So what we'd like to ask you is, you know, there's this new landscape of cryptocurrencies and investors are getting interested in it. If they are interested, why? And if they aren't, why should they be interested in cryptocurrencies?
Well, you know, it's such an interesting question because we're talking about right now today. So everybody thinks, oh my God, if I put $1 in cryptocurrencies, I'm going to be a billionaire like in 5 years. And because because there's so much hype and there's so much bubble talk right now about Bitcoin and all these other cryptocurrencies. So let me answer the question at a high level first. Cryptocurrencies are not a fad. They're extremely important. They're probably the most innovative thing to come out of Silicon Valley in the past 30 years, and that includes all the space stuff and electric car stuff and Google and everything. Like cryptocurrencies, when I kind of describe why that is, you'll see what I mean. The other thing is, on the opposite side, it's largely a scam. So many people are saying, there's all this bubble talk, like my cab driver wants to do an ICO or invest in Bitcoins. There's a lot of people who go into situations like that, and we saw it with the internet in the 90s, we saw it in housing in the middle O's, and we're seeing it now in the cryptos. There's a lot of people who go into the space and want to take advantage to basically get as much cheap and easy money as possible and leave the uninformed holding the bag. So how could that be? That it's both real and incredibly important, but I would say 95%, which is a big number, 95% a scam. Well, take a look at the internet. So the internet, huge gains from 1995 to 2000. Still, if you manage to invest in the internet in around 1996 or so and cash out in 2000, you don't need, that's the bulk of your wealth, and that's the bulk of the wealth you'll ever make. And yet, most internet companies that started in that period are gone. I mean, what's left? Amazon, Yahoo, eBay, Priceline. I can't think of too many others.
That's a great point,
I would say 1,000 companies were a scam. I mean, companies would just take their name and put .com at the end of it, and their stock would go up 500% that day. That's a scam. You know, so when you use something, when the price of something goes up for artificial reasons, it's because so many people are being influenced by greed and the hype that, I mean, value doesn't change so quickly. And yet, during that period for the internet, during the 00s for real estate, and now for not all cryptocurrencies, but many, there's largely a scam. So I can go at this from several directions, like A, why is it important? Or B, how do you avoid the scams? Like what's happening in the space? One other point I want to make, if you don't mind. And this is a very important one. I didn't make this in my talk. I don't like the word cryptocurrency because crypto, what do you think of when you think of crypto?
Right. It kind of has a negative connotation a little bit, right?
Almost negative, but tell me, let's free associate. What else do you think of when you think of crypto?
You think crypt keeper. You're thinking, you know, kind of going down kind of to the depths of things, kind of underground, I guess, a little bit.
Yeah, and I think math and technology like cryptography, I think computer science, I think that's something I don't understand is happening. And it's not like, you know, nobody understands how the internet works, and yet you put your credit card into it every day and buy things, you know, you buy toilet paper on Amazon now and it gets shipped overnight. You don't say to yourself, oh, Amazon is software on top of the TCP/IP protocol that I would like to use. You think Amazon's a store. Well, cryptocurrencies are at the very basics. It could get a little more complicated, but cryptocurrencies are currencies. So Amazon was a store that solved certain problems. I don't have to actually physically go to the store. I can search for items much more quickly than like finding the right aisle and then something's misplaced and whatever. So Amazon solved a lot of problems that we had before the internet. Now, these, let's call them data currencies or these new style of currencies, bitcoins or whatever, they solve many problems that traditional currencies have. And that's how I like to think of it. So let's just look at the history of money. I talked in my session about kind of the evolution of every industry and how cryptocurrencies fit into the evolution of money in that way. But let's just talk specifically about money. Money started off with barter, right? You made rice, I made shoes. I'll trade you a pair of shoes for 2 bags of rice. The problem is obvious. What if I only need a quarter bag of rice? What am I going to do, give you a quarter shoe? So we had to all find something common to, change our we all created wealth in different ways. You created it through rice, I created it through shoes. We had to translate that into some store of value that we can all understand. So gold was a metal that was hard to mine. It was scarce on the planet. And we kind of, as a world, chose gold. As a species, we chose gold and silver and some other precious metals. And we all started mining for gold. And then we would, as a store of value, we could move around with it. Like you couldn't move around with bags of rice, but you could make gold into jewelry and travel around with it. And that's how you traveled with your store of value. And then you can trade. Because we all understood, based on ounces of gold, we all understood how many shoes that bought, how much rice it bought, and it would change, and there was one exchange rate, gold to everything else. Now, gold has a problem. If you have a lot of wealth, or if a kingdom has a lot of wealth and it needs to move, how would you do it? Or if you wanted to buy something big, would you need like a big chunk of gold? Like, gold had some major problems with both store of value and transactions. So enter in coins and then paper money. And paper money was backed by the government, which was backed by gold, until recently. Whether it was from the Egyptian government of the pharaohs to the U.S. government, gold was for a long time backed by, or precious metals were backed by, currency was backed by the precious metals that the government had. That changed, and instead we decided to focus on, let's just trust the government. Let's trust in God we trust. In George Washington we trust. Oh, here's the Secretary of Treasury, his signature. Oh, here's an Egyptian pyramid with one eye, just in case you're into that. Like, let's trust that. And so overall, we grew to trust paper money, but there's still a lot of problems. For instance, you and I have a dollar bill in our pocket, but I don't know really what that dollar is worth. It could be worth just a piece of paper. What if somebody in Washington, D.C. decides to print up a quadrillion-dollar bills? Which is what happened in Germany in the 1920s, happened in Argentina, happened in Russia in the 90s, not so long ago. The currency will collapse. So you can't. There's the possibility of human error in a centralized government-backed currency. This is not an anti-government pitch. It's just a problem with money. Another problem with money is forgery. Now, we take a lot of steps to fix that, but it's still a problem. Another problem is double spending. I can use my credit card with you, I can use my credit card with you, and then I can call my credit card company and say, cancel that one, and just go with that one. So I could double spend. So there's another problem. Let's say I'm sending money to you, and you're in China. I have to go to the bank, they go to the local reserve bank, they go to the central bank, it goes to the international wiring system, goes to the Chinese central bank, goes to the local reserve bank there, goes to your local bank in China, and there's a lot of potential, a lot of people in the middle, a lot of potential for human error, a lot of transaction fees, and a lot of people watching. So there's no privacy. Like, if you do that, a lot of 3-letter organizations are tracking your money if it's a big enough transaction. So Bitcoin and cryptocurrencies are the next evolution of how we solve. We're always trying to solve problems with money. Solving problems as a store of value and solving problems as a way to transact. And this is the basics of cryptocurrencies. There's much more, but that's the basics. That's why it's important. That's why it's important to start building a portfolio, because the demand for money is $150 trillion, but there's only about $200 billion worth of crypto. So that's 1,000%, 100,000% gain right there. So that's the basics of crypto. Now we get into these ICOs, which are like, okay, well, I want to make a coin that has a specific purpose. The purpose might be, maybe it'll solve a problem Bitcoin has, which is Bitcoin is anonymous, but not anonymous enough. So there are some currencies that make it more anonymous. There might be a coin that says, Bitcoin, it's hard to buy a cup of coffee with Bitcoin because it takes too long to verify a Bitcoin transaction. Here's a coin we figured out a software way to make it easier. And so here's another coin. So there's more and more uses of coins, and that's why there's more coins coming. Doesn't mean Bitcoin's bad. Just like there's the dollar, there's the Canadian dollar, there's pesos, there's euros. Those are all artificial borders. Cryptocurrencies have use borders. And again, that's where ICOs are coming from. The way to avoid a scam ICO is to make sure there's a good and big use, and to make sure there's no centralized, it doesn't have the same problems as government-backed currency. It's not centralized. There's no infinite printing at someone else's authority. And as you explore this, make sure it solves the basic problems that current money has. So that's in a nutshell. I'm sorry I took it all up and
No, I literally didn't even have to keep asking those questions. You gave us a great
and I didn't want to touch
everything.
Technology at all, because you don't need to understand. I don't need to understand how a car is built to drive one across the street. Now, I myself will have an accident if I just drive it across the street. I don't have a driver's license, but most people are able to drive a car without understanding how a car works.
So, we talked about what it is, why it's got that value, why we're seeing, the difference in the currencies and the uses for it. Why should investors, though, really get involved in this now? I mean, why is it such a good time for investors to get involved?
Well,
a lot of people think, hey, maybe I missed the boat. Is that true? I mean, what do you think about that?
So that's two questions. I'll answer the second one first. Did they miss the boat? No. Now, it's true, all the gains of an innovative technology kind of happened in the beginning. So 1995 to 2000, you would have gained enormously if you invested in the internet. But it's not like the internet possibility stopped there. What happened after 2000? Facebook, Twitter, Uber, Airbnb, Google, went IPO'd after 2000. So I would say we're not in inning 0 anymore, but we're in inning 1. And huge gains are going to happen all the way up to inning 9, but the biggest gains are going to happen between inning 1 and inning 4. I don't know how you delineate the innings, I'm just using that as an analogy, but we're still early. And I'll tell you why we're early from a mathematical point of view. Again, what I said before, how much currency is in the world? 150 trillion. So that means the demand for money is $150 trillion. The world needs 150 trillion in money to survive. So, but all of that 150 trillion has all the problems I just described to you. Cryptocurrencies, which are only 200 billion, they solve those problems. So cryptocurrencies have to, and there's limited a number of them, so they have to rise in value to replace to handle the demand for money. The supply is low, the demand is high, price is just going to go higher. Your dad doesn't own any crypto, my parents don't own crypto. It's just the beginning, and there's many catalysts. I mean, there's catalysts that we don't yet know, but like one catalyst is, okay, Amazon at some point will start accepting cryptocurrencies. We know they will. At some point, the citizens of a country that's falling apart will say, hey, we don't want the XYZ currency anymore of our government. We're going to all switch to Bitcoin or crypto or whatever. And then at some point, a government itself will say, look, our default currency is now cryptocurrency. So there's at least those three catalysts, and then that's going to be, 1,000 times the value, of what we are currently seeing. Plus, there's going to be more use cases that we find, and that's going to create value. So I've been dabbling in it since 2013. I built a store to sell my book one of my books on Bitcoin, and then I got more seriously involved just this year in terms of buying it and getting into these initial coin offerings, ICOs. Again, I look for the ones that aren't scams, but the ones where there's huge multi-billion or bigger use cases, and that's been very successful for me. And I continue to keep doing it and exploring it and learning, and also as I'm doing here, I continue to share what I'm learning. So that's very important to me, is that people stay out of the scams, get into things that are useful, and will more quickly see a world that solves many of the problems of money. That's going to be a more economic and efficient and innovative world.
So now when we talk about, altcoins and things like that, explain to people what that is. I think a lot of people don't even understand what that means.
Right, so a lot of people think cryptocurrencies are Bitcoin, because Bitcoin was the first. And that's true, Bitcoin's the first. But like I said earlier, there's many currencies. There's US dollars, there's euros, there's pesos, there's Canadian dollars, there's yen. But why does a Canadian dollar exist and a US dollar exist? It's because at some point, there was a border put between Canada and U.S. It's very artificial. There's no real border between Canada and the U.S. It should be really all one. It could be all one country. It's just a historical artifact that there's Canadian dollars and U.S. dollars. Cryptocurrencies don't have that. An altcoin solves a problem. Alt currencies, cryptocurrencies, have what I call use porters. If there's a problem to be solved, if there's a use, there will be a coin developed to solve it. Now, and that's okay. It doesn't mean that becomes the coin. Bitcoin is great as what's called a store of value, meaning you can put all your wealth in Bitcoin, and it's secure. You don't worry about many of the things many people who put all their money in cash worry about. But Bitcoin, as I mentioned earlier, it's hard to buy a cup of coffee with Bitcoin. It's a Bitcoin transaction takes at least 10 minutes to occur. So there are other currencies that might solve that problem. Bitcoin's anonymous. If I buy something from you, it's anonymous. It doesn't have your name or my name on it, but it has the size of the transaction, and that's kept in what's called the blockchain. So everyone sees the transaction, but they don't know who did it. That's anonymous, but not anonymous enough. Maybe I want that transaction size, nobody to see it, or the time. I don't want anyone to see it. Imagine if governments are doing deals together. They want to keep it private. They even want more anonymity than Bitcoin provides. So another coin or two or three might start that try to solve that problem. So whenever there's a problem, cryptocurrencies are perfect because they're software-based. You just write new software to solve the problem. If paper currency has a problem, it's not so easy to fix the problem. Like if there's inflation because someone made a bad decision about the US dollar, you can't just automatically fix that. Or if, or a lot of problems in currencies are solved by lawyers. So let's say I sold you something and you sold me something and it's bad. Well, now I have to sue you. And a lawyer is involved in our currency transaction. There are ways in which Bitcoin and some of these altcoins solve even that problem, believe it or not. So contract law is kind of built on top of Bitcoins and cryptocurrencies in a way that I won't get into right now, but that's a whole other area of demand. And a lot of altcoins are coming because they have their currencies, but they have built-in contracts associated with them. And so I think contract law and the whole field of law is going to just end or change.
I mean, the landscape is obviously changing so much. I mean, you've given us a lot of information. I mean, that's phenomenal. I mean, to learn where it's going, where it's headed, it's obviously a lot of time, as you mentioned, to get in.
And I want to answer you. Yeah. Do they have to get in now?
Yeah.
The answer is no. They can get in later. But if you get into the right currencies now, you have the most gains.
Hey, well, if James Altucher is getting into it, I think you guys might should too. Can you tell the folks where they can find more about you and learn more about your show, what you do?
So my podcast, I'm really proud of. It's the James Altucher Show. You can find it on iTunes or Stitcher or the Google Play Store. You can go to jamesaltucher.com, ALTUCHER.com. Or my best-selling book was called Choose Yourself. I'm very proud of it. And or just find me on Twitter and say hello @JAltucher and tweet hi, and I'll say hi back.
Well, James, thanks so much for coming on the show. I know you're going to be interviewing a few more people coming up. You're doing Marcus Lemonis.
Yeah, I'm excited about that.
Awesome. Well, thanks so much, and we'll definitely have you back on soon sometime.
All right, great. Thank you.
Stay tuned for the next interviews here on InvestorTownhall.com.